On the downward slide once again today. An internal memo shows the worst may be yet to come. Consumers want larger models with cheaper price tags than the iPhone. And while other tech names like Facebook and Google are snapping up companies, Apple's giant war chest lies dormant. Here to break it all down, Charlie Gasparino, strategic advisors James Frischling, and market expert Bruce Turkel with us. So this is a painful memo to come out in the midst of the Samsung trial. They basically made a full screen to show to the whole company saying consumers want what we don't have. And they're talking about phones that cost less than $300 with screens bigger than 4 inches. How embarrassing is this?
This is embarrassing, but if you watched Fox Business over the past year, you would know that this is what Apple's been worried about since last year. We reported exclusively that Apple's board was worried about the pace of advancement and technological advancement at the company and innovation, and whether Tim Cook, the new CEO, replaced Steve Jobs, whether he had the chops to do that sort of innovation. And this is a function of that. This is, in a way, affirmation of our story, but just shows you that it hasn't changed since last year.
I mean, it also tells you, James, I think what's so startling is that they are also afraid of the problem. I mean, it's one thing to have investors out there talking about, here's Apple's problem, here's what they're doing. But for them to acknowledge it, that they internally within their numbers see it as a problem, and are they creating an answer, do you think? I mean, are we about to see a big, cheap iPhone?
You know what? They're sitting on all this cash, and yet they're the boring, right now, giant in their space. So where Jobs was amazing and anticipating where the market was going and actually making sure the puck was there when the consumers were looking for it. The fact is, Tim Cook and his team haven't done that right now. Consumers want more for less, and the other companies are getting it, and Apple continues to be sitting behind.
I think we're missing the story here. It's not just change of. It's not that. There may be an issue with the CEO and the board right now. I mean, I think that based on what I know about this company and what we reported last year, and I can tell you, I got tremendous brushback, or fight. They were fighting
blowback.
me. Blowback is the right word from the company at the time when we said that the board was really angered at Tim Cook. What they were saying is no, they're not angry with him. But I think this underscores that they are.
Yeah, definitely. I want to bring Bruce in before he gets lost in here. What do you make of this? And as a company, how do you feel about the fact that you've made an internal memo that looks terrible and gets released and is everywhere? I mean, do you say why would we ever create a full screen like this that would go out to everyone?
I think what's important to remember is Steve Jobs famously said, "It's not my customer's business to know what they want next." What Jobs was such a genius at was anticipating not what customers were looking for, but what they hadn't even thought of, and bringing in new products. So I think this memo is nothing more than Jobs walking down the hallway ranting and raving at people to come up with the next big thing. The problem is the iPad is only 4 years old. These kind of developments take time, but the investors, Wall Street, and of course consumers are not used to waiting for the next big thing anymore.
Well, the question is, I guess what we should ask, is Tim Cook's job in jeopardy?
Yeah, what do you think?
I can tell you they weren't happy with them a year ago, even though they fought me back. I know for a fact that that board is worried about the pace of innovation and whether he has the chops.
Okay, we'll leave it there. Thanks to all of you.
Wasn't GM aware of a problem with the Cobalt's ignition switch back in 2006?
We're looking into that.
And what was GM's response when they discovered the problem?
We are looking into that as well.
Oh, Saturday Night Live poking a little fun at General Motors CEO Mary Barra's testimony in front of Congress over that massive recall. Repairs on the cars in question begin today. And GM says it's going to take about 30 minutes per car to fix. Let's bring back our panel. Charlie, you got scoop on this one for us.
Well, from we understand, what sources are telling the Fox Business Network is that the GM board has lawyered up. They have, from what we understand, a fairly prominent law firm. What that just shows is this, and
they had a lot of lawyers before, though. What's different about this?
Well, no, this is a specific lawyer, from what we understand, and we're going to report this out more today. That is handling this one situation. I mean, what they're worried about, quite frankly, is liability, obviously. And here's the real liability. And we don't know exactly who knew what when, but if you could somehow prove, and I tell you, you need a lawyer on here. I'm not a lawyer, but I know what they're worried about. If you could somehow prove that management, pre the bailout, knew about some of these problems, like they knew about it, not that it might happen, that there was something bad here, well, then that could throw in question the bailout. And remember what happened with that bailout. Bondholders got screwed like there's no tomorrow.
So they could end up owing a lot of money. It would void the bankruptcy, and they could end up with just a gigantic debt.
I can't tell you what people knew when. I'm not in. I don't know. Have the emails, and obviously they're saying they found out about this recently. But if you can prove that they should have known or they had some reason to know before that bailout, this thing is ripe for plaintiff lawsuits.
I mean, that's terrible news, Bruce. At the same time, you know, it's amazing to me when you see Saturday Night Live pick up on a theme. And they're making fun of it, a story that I think is business and is, you know, very focused on investors, and they're poking fun at it. It's really reached critical mass.
Yeah, and the thing to remember is the only people laughing at this are the Saturday Night Live audience. Nobody else is laughing. Right. Remember, people died. I think we have 13 deaths now. And if this is shown to be a cover-up, if it's shown that GM knew about this, as you just heard, this is a death spiral. Because ultimately, their product brand is about trust. And if they lose that trust, I don't even know how they pull out of that.
Yeah, absolutely. Jim, what do you think?
You know, Feinberg has been appointed, obviously, as the go-to guy to help find the fair and upstanding way to go forward, except his history is on American tragedies. GM, ongoing concern, needs to have the confidence of consumers. So whether it's old GM paying a tab, new GM paying a tab, or rewriting the books, you have a consumer base right now who is not thinking very highly of this company.
I like Kenneth Feinberg. He's a decent guy. He's been on Fox Business a lot. Remember, he handled some of the stuff involving TARP and the compensation of bankers following TARP. But remember, the Obama administration has skin in this game. They bailed these guys out. They have unions that they want to protect. My one caveat to saying this thing is that GM's going to implode is that there's a political story here. I don't think that the administration wants them to implode. So DOJ is not going to put them out of business.
Thanks to all three of you. We appreciate it. Earnings season kicks off tomorrow. Already things are not looking good. 93 of the S&P 500 companies giving negative guidance compared to 18 offering positive projections. That's not good. So where should you steer clear? Here to break it all down, Brian Sazi of Bellis Capital Advisors, Scott Martin of United Advisors. He's also a Fox News contributor, and James Frischling of Network Capital. James, you say steer clear of Netflix. I love Netflix, but as a customer.
I agree with you. I'm a big Netflix fan, but as an investor right now, the competition is fierce. And every day more people are trying to come up and either imitate their strategy or supersede their strategy. And I just think Netflix right now is just completely overbought. Competition, subscribers can reduce their memberships, and essentially they can keep their subs and be losing money on those same very subs. So,
Brian, you want to throw out Walmart.
Well, here you go. If you want to lose money, go buy some shares of Walmart today, because I think they're sitting on an earnings warning. They came out a couple months ago and issued very weak sales guidance. I think Black Friday promotions.
So this pop, I mean, we're looking at a chart right now. There's a little pop in there. Dump it. Get out of it.
Peace out, because I'm telling you, they're sitting on an earnings warning. They ordered too many goods for the quarter as a result of the bad weather, and they have no pricing power. Not my cup of tea.
Scott, your pick is American Eagle Outfitters. You say avoid that one.
Yeah, it's kind of low-hanging fruit today, Melissa, because somebody probably got my email and underperformed it, actually got a downgrade today and got absolutely smoked. Here's the deal, though. I mean, teen retailers are in a lot of trouble for a lot of reasons. The cool kids just aren't shopping at American Eagle anymore, or a lot of their competitors, for that matter. They're publicly traded like Abercrombie & Fitch and Aeropostale. They're all hurting, and so you're going into a consumer area that I think is especially weak, given the weak job numbers, the fact that teenagers don't have money anyway, let alone they can't find jobs or even want to work. I'd avoid these as you go into the retail season here.
Scott, what is the larger message that's going on right now? I mean, Charlie Gasparino was saying you call this market a puke. The NASDAQ is puking today, which is, you know, Charlie graphic. That's very, very him to say something like that. I mean, we are looking at a Dow that's down 144 points. We had a rough day Friday. There is a feeling, a real loss of momentum. What do you think is going on, Scott?
Well, listen, there's some areas that are very sensitive right now, Melissa, the pharmaceuticals, the biotechs, but there's actually some places that are working out okay. Ironically, emerging markets, which tend to be high beta areas that move a lot with the market, are actually hanging in there okay. So is Europe, and sort of like utilities and consumer staples. So it's not all bad. I think it's one of those tapes that feels a lot worse than it really is, but we have to watch it, because if those areas I mentioned start rolling over, then you got a real problem.
You guys think it feels worse than it actually is, or is it as bad as it feels?
Well, the reason why I don't think why it's not as worse is because, like Scott mentioned, you have the people rotating into a lot of the value names. So what I'm telling people right now you want to see if Coca-Cola, the Pepsis, the Hershey's, which have been relatively outperforming, do those stocks start to come back before they report earnings in the third week of April? And I'm getting a little concerned.
What do you think?
Look, I think the job growth has been modest at best, wages slightly increasing. I think consumers want more for less. So while I agree with some of the headwinds that Walmart's facing and certainly some of the labor issues, I still believe the fact is there's good value and the consumer feels their dollar goes further at places like Walmart.
But would you get out of the market altogether here? I mean, are you worried? Would you, trim back what you have?
I think at this point you never go broke booking profits. The fact is, given the headwinds and given housing we believe is going to create an issue for the economy, not a bad idea to take some money off the table.
Interesting. All right, thanks guys, appreciate it.